I mean, we have a Santa Claus rally. Markets melting up once again this morning. Oxbow Advisors managing partner Ted Oakley is here. Ted, good morning.
Good morning, Lauren.
I remember this time last year, Treasury Secretary Mnuchin called the big banks, make sure everything was okay. The president was talking about firing Jay Powell. What a difference a year makes. To you, what is the reason markets have been on a tear this year? The biggest reason for that?
Well, the biggest reason, Lauren, had to be the easy money. You know, it came from ECB, it came from the U.S., and when you got that going, that's one of the things that got everything going in terms of the bond market, and that got the stock market going. I mean, it hasn't been an earnings move for sure. We made contracting earnings now for 4 quarters in a row. So the market has moved on its own. It's really been on a momentum move. And
something rare has been happening, too. Stocks, Ted, and bonds making some of their most significant gains, since 1998. In the past 2 weeks, the S&P up 28.5%, and then you have a bond rally pushing the 10-year Treasury yield down to about 1.9%. So can this keep going?
Well, I suppose it could. For us, we're looking for the 4th quarter to be the lowest GDP number for the year. And I think people will probably sober up a little bit when they get into the first month or two. We'll have to see. But normally, after you have a big move like this, 25% or more, you don't follow it up with a move like that again. It's typically a more a regular move after that, one way or the other.
Yeah. Ted, it's Veronica Dagger. Are you putting new money to work, and if so, where are you putting it?
Veronica, we are, when we get new money in today, we're probably only putting about half of it to work right now. The problem for us is that we don't have a lot of stocks that we screen that are in the value level for us. We will put money in, but typically what we're doing recently, we bought some of the drug companies, we bought some energy, we bought some income items as well, and we still have a position in the long-term Treasury. So for us, that's about where we are at this point in time.
Ted Oakley, thank you so much for joining us this morning.
You bet, thanks.
All right, well, coming up, call it a surprise citation.